and good morning, everybody. Thank you for joining us. Thank you for joining us from all over the world. Thank you for joining us today in our webcast about transforming digital customer experience that we are doing with Pega. Today, we will be having the opportunity to engage with Shankar Krishna, who is Capgemini Executive Vice President, Capital Market and Banking, as well as Mark Andrew, who is the VP of Financial Services and Insurance at Pega. And I am Elias Ghanem. I am the Global Head of the Market Intelligence, and it will be my pleasure to host today's session. Few housekeeping elements. We are recording today's conversation, so we can broadcast it later on, and you are all on mute. But as you are along the conversation, please feel free to share your comments, your questions into the chat that you have on your screen. And at the end of the day, we will be having a conversation, a Q&A session. In today's presentation, I will be sharing with you the key findings of the World Retail Banking Report that we released a few weeks back. And after that, we will have Shankar and Mark that will walk us through how they are observing the main elements in the industry. And after that, we will have a Q&A session. So one more time, please do remember to post any comment or any question you have, and we will come back to it in the coming minutes. With no further ado, let me jump into our World Retail Banking Report 2021 that was released a few weeks back. It is our 18th edition of the report, and this year, with our current environment, we wanted to talk about three very important words: sustainable, experiential, and all into the banking ecosystem. Sustainable experiential banking is the topic of the report. For any one of the report, we have a 360-degree view on it, and out of it, we were able to interview more than 8,000 customers around the world. We also interviewed more than 120 executives, and in this report, we had Pega, as well as Temenos and Salesforce, that was the alliance partners that were engaged into the report. What are the main key findings of the reports? Really, what we've been observing for the last year is, and if I may ask you to go on mute in the meantime, what are you observing in the last few 12 months of the situation that we are living in is really banks are on the edge of a new era. At Capgemini, we call this era Banking 4.x. And we're going to see what Banking 4.x stands for. And the key message is, are you bankers ready to lead the charge? What are the main summary of the report? It's more than time. It is urgent to embrace disruption and align the priorities as well as the relevancy and the resilience towards the Banking 4.x that we will be explaining. It is time to embed finance in everyday customer lifestyle, making banking ubiquitous, inclusive, and to everybody, and how to make that happen through a platform-based model. And finally, if we embrace and embed, it's time more important, if we want to make it happen, to harvest data and create an experiential customer journey through intelligent and personalized engagement. So it's really about embracing the disruption, embedding finance in everybody's life, and harvesting. The most important element is the data. So we talked about Banking 4.x. Let me get into it. What is Banking 4.x? It's an evolution of the banking. We started with Banking 1.0, and we've been having it for many years. This is the traditional banking dominated by vertically integrated banks, fully delivering everything, producing as well as distributing. And that's what Banking 1.0 means about producer and distributor. Then we evolved to Banking 2.0. And this is after the 2008 crisis, where because of the crisis, it became heavily regulated. And that's heavily regulated banking post the subprime crisis, resulting in healthy capitalization and stability. but it also came with a layer of regulations and much more scrutiny. And this was the beginning of the digital banking. So highly regulated banking post financial crisis was banking 2.0. We evolved into the banking 3.0. This is when the regulators across Europe came up with the regulation related to open banking, where banks share their data with third party to rejuvenate the FS experience. And this is where competition from new players started to emerge. We called it Banking 3.0. And then Banking 4.0 came in, where at Capgemini, we believe we called it the Open X. It's not anymore about banking, it's about an open ecosystem. And this open ecosystem is the conclusion of 4 paradigms that you are seeing on the screen, where while banks sell products, consumer wants to buy experience. Where banks leverage their assets to offer the service, customers are expecting to be known by the bank and leverage the data for the hyper personalization. And for the banks to react on that, rather than doing it themselves, build or buy, or an ownership, it is important to make it into a shared access and through partnership. This was the beginning of the collaboration, and we called it open for an open ecosystem, X for open experience. And we thought that banking 4.0 will last for some time until we got the COVID. And for the last 12 months, what happened? We turned completely digital. And for us, Banking 4.x is an evolution of the OpenX ecosystem, where banks become enablers and finance is now invisibly embedded in customer lifestyle. The way we position that is the future of banking is a mix of several elements. We need to have a sustainable growth, long-term value creation. And we need to make sure that ESG is at the heart of everything we do. But also, we need to have the right way of doing it. And that's where if the efficient platform comes to play. And the combination of sustainable growth and efficient platform is what we described as the embedded finance that we are looking for. But also, which is very essential, because driven by the innovation that we are seeing, it's about putting the customer at the center, customer centricity through a multi-channel approach. How you make that happen? Leveraging data on one hand and creating the right digital customer experience layer. And that's what Banking 4.x is an embedded finance leveraging data delivered through digital customer experience and layer, supporting sustainable growth, platform approach, and customer centricity. So this is what is it. Now, how can we make Banking 4.x a reality and how to create long-term value? We created this matrix where we looked at it from a time perspective, immediate and below Banking 4.x and in the future, but we also looked at it from internal versus external capabilities. And the first step to create the Banking 4.x immediately and focusing internally is shift to cloud, scale API, build the banking as a service, and implement the customer experience layer. This is what we call building the digital foundation. Then it's about opening yourself to the external by creating new product and services and by driving financial inclusion. And that's why for us it's driving inclusive innovation. In the future, it's time to evolve to become an experiential platform by evolving from mass production to mass customization and, very important, transform the branches. And the end game is evolve as an inventive bank, which is about be sharp, identify the niche, industrialize the innovation, expand the customer base while maintaining your cost low. So in a nutshell, this is what came out of our report. And now, with no further ado, I will pass it to Shankar to have a discussion with Mark on the reaction to what we have seen. Shankar, the floor is yours.
Thank you, Elias, and welcome once again, Mark, and welcome to our audience around the world. At this moment, our thoughts and prayers for all the families and others affected, especially in India, where both Capgemini and Pega have a very large presence. Great setup, Elias, and really loved the summary, which paves the way for inventive banking, and in the next few minutes, we will focus on some of that here. But first and foremost, given that we are still out of COVID, Mark, my question is, we know that the banks struggled to deal with the requests that came in during COVID, and some of them were in a better digital state than the other. But in all honesty, even the biggest had problems during the pandemic. As we come out of the pandemic, what were some of the underlying problems, Mark, in your opinion, that banks had to grapple with, do you think? Can't hear you, Mark.
Sorry about that. So I think a lot of this comes down to where banks were in their digital transformation journey. There was a great cartoon that came out. I don't know if everyone remembers it. It was just about a year this time where it showed some people in an office building saying digital transformation is years away. I don't see our company having to move any faster than we are. And you saw this big wrecking ball coming in towards the building that said COVID-19 on it. And I think that's really where a lot of banks were. They had started their digital transformation journey and had plans in place to digitize a lot of their capabilities. And but a lot of the challenges we saw were really around how banks engage with clients. And the first set of things were really what was uncovered during the crisis were those gaps in those digital servicing capabilities. As the branches had to shut down, as people had to make requests and engage with their financial services institutions remotely, what we saw were a bunch of different capabilities and services that couldn't easily be delivered via digital channels. And as you see here, and as the survey saw, there's a huge need to be able to interact across channels. And I think in the past, there was always that crutch that if there was something someone couldn't get from the web or online or from their mobile app, they'd go, they'd call the call center or they'd go into the branch. So people would actually work across different channels in the past. And all of a sudden they had to be able to address all their needs in the digital channels, and those digital capabilities just weren't quite there yet. So banks started seeing a lot of those gaps in digital servicing capabilities. And a lot of them were related to things like how to open certain types of accounts where you couldn't go in and do a wet signature, certain types of problems that you had to resolve where you wanted to see certain identification, or if someone wanted to talk to someone. You saw a lot of things around applying for loans and other advisor related services and other nature of those things. So that's sort of the first set of things in engaging with customers. And the other part of engaging with customers that I think were underlying problems that banks were already having was the way that they were delivering offers to customers. They saw very low response rates, and that's been a historic problem in banking. But now with people's focus and attention on how to manage through the crisis, those response rates to trying to drive cross-selling activities fell down even further. The other area of challenges and problems that really surfaced were banks' ability to deliver service at scale, and their ability to quickly scale and adapt their operations to address the differing needs of their business. And what we saw as an example during the crisis were they didn't have all the operations staff, for example, to handle the huge increase in volumes of certain types of requests. A great example, banking has never been an area that has had significant challenges in call center wait times. The average call center wait time in the banking industry, at least in the retail banking, was around 40 seconds, which is great compared to most other industries. When you look at travel and transportation and telco and others, banking this has not been a problem in banking. During the crisis, the average wait time, depending on the institution, went from 40 seconds to 40 minutes, and in some cases 90 minutes at some organizations. And that was just the average. It was not uncommon to call into your bank and get a message saying that your expected wait time is 360 minutes. I mean, can you imagine being told that you're going to have to wait that long you're going to have to wait 5 to 6 hours to talk to someone. And that's where things really started to fall down. And the challenge that the other underlying problem that banks had were they didn't have the people that could easily shift their focus to other needs when the Paycheck Protection Program surfaced. They didn't have enough people that could go and review and process all the deluge of loans. They weren't easily able to flex their staff and adjust. Their operations teams were very siloed and focused on individual functions and processes, and they weren't able to have them just take on a new set of responsibilities that easily.
Absolutely. And some of what you're mentioning, Mark, we saw as Capgemini teams around the world were asked to help out and added arm of the bank to help them through this crisis. So can relate to a lot of the things you were mentioning. Because of the fact that you service banks around the world and the Pega platform is getting modernized on almost an annual basis, coming out of COVID for our audience to learn from it, what were some of the contrasting examples of how you thought banks handled this? Obviously, some mistakes were made and nobody's fault. I mean, nobody anticipated COVID, and some banks were able to handle it more effectively and take care of their customers a little better. So, what do you think coming out of this, the learning, if you can please compare and contrast the two, please?
Yeah, absolutely. So we did see a lot of the challenges, and I'll start with what we saw that people did wrong. So one of the challenges we saw or one of the mistakes a lot of banks made, and maybe it was because of the infrastructure they had in place, is they would put up dumb web capture forms to just deal with all the incoming inquiries. So if you went to almost any banking site last year, you would see on their homepage some form, some banner, and you still see it today saying, if you have any requests related or being impacted by COVID, click here. And that in itself wasn't necessarily that bad, but most of what people did just to meet the need and get something out there quickly is they created these dumb web capture forms where people would go in and type in something and would just go into a log, and it ended up getting lost in the mix. There was no easy ability to go track that, see how long it took. A lot of requests just kind of got lost in the mix. So that was one of the mistakes we saw several people make, and others actually jumped to focus on creating mobile apps and creating just a mobile interfaces or online interfaces where they ended up embedding a lot of the logic directly into that mobile application. And then if people wanted to get out of there and actually talk to someone and run the process, they didn't have a seamless place where all that business logic was based. And the ones that we saw do this more effectively were the ones that had an underlying platform to manage their business processes, to manage the rules and the policies that they had across their bank, and that could more easily adapt and change those policies fairly quickly. As an example, one of the Canadian banks we worked with, Scotiabank, was a great example of someone that handled this extremely well. What they were able to do is literally within 36 hours, they were able to digitize some of their existing servicing capabilities because they had those processes and policies defined independently of the front end channel. Because they had taken a center out approach to defining their business processes and their logic, they were able to stand up digital forms that were more intelligent forms that had the business logic in there. So as they captured the information request, it generated a case where they were able to establish an SLA, track that problem through to its resolution, and be able to identify where there were bottlenecks. So they were able to stand up new digital servicing capabilities extremely quickly, and they were able to automate things like the deferral requests and direct deposits that came in from the Canadian Revenue Authority. So as a result, they were able to deliver $1 billion in payment relief to their customers immediately. They were able to accept and process over 60,000 direct deposits from the Canadian Revenue Authority just in the initial 3 days. So that's one great example. Another great example is in how some people digitized their ability to capture and process lending requests. We saw Paycheck Protection Program, CBILS in the UK. There were programs in Germany. There were a lot of initiatives to drive out and enable people to make small business loans. An example of someone that was not able to do it as effectively, and obviously I won't mention the name, but there was a regional bank that a colleague of mine worked at, where basically they had all these policies that, if you remember, were constantly changing. just in paper documents that were being delivered out to people. They had people from other parts of the business that were being pulled in to work on these loans. And again, they created these dumb web forms to capture the loan applications, and they would get hundreds of thousands of loan applications and then have to review all of those and determine how they should be handled. Now, if you remember, a lot of those loans had very specific requirements that identified who would qualification criteria around how much you could lend or borrow, what it could be applied towards. A certain amount had to be applied towards payroll, a certain amount could be applied towards mortgage interest or rent, things of that nature. We worked with one of the government agencies in Germany, the Bavarian state government, where what they did is they built all that logic directly into the online capture form. So instead of humans having to manually review and filter out all those unqualified applications, they were able to basically go up to the front end and filter out those by building intelligent forms that pre-qualified the loans and asked people were entering in their loan request could check and validate what the funds were going to be used for, how many employees they had, what amount they could actually qualify for. As a result, the Bavarian state government was able to build out and deliver this digital loan application in just 5 days. And they were able to they had around 400 to 500 people that were processing loans that were completely underwater. As soon as this application went in place, they were able to process over 200,000 applications in just the first 2 weeks. So another great example of how they were able to do that. And part of the benefit was being able to codify those policies and rules so that it wasn't reliant on a human to actually go through that. The final example I'll bring up is kind of what I referenced around the challenges people had around their marketing campaigns. People have, been investing in next best action, identifying which customers may be relevant to a mortgage or to a credit card or to an investment, something of that nature. But what we saw during the crisis and what surfaced were a lot of the companies' campaigns were myopically focused on cross-selling, or they were very product-specific strategies. So they looked at mortgages and they said, we're going to build analytics to determine who are all the customers that may be out there about to buy a house that we should offer a mortgage for. Who are all the customers that may be in the market for making investments or building up some savings that we should offer a savings product to? So they were very product oriented. And as a result, Sankar, if you were identified as fitting into 2 or 3 of those categories, you might have gotten 2 or 3 of those different offers. And we didn't know what is actually right for you. And the banks that handled this well, there's a couple of examples. One was RBS NatWest was one great example. CBA, Commonwealth Bank of Australia, another great example. What they did is they actually shifted their campaigns to be basically more empathetic and to also focus on how they could look at the needs of customers beyond just selling, but what are their servicing needs? What help might they need during this crisis? And look at and determine maybe at this point in time, instead of offering them a new mortgage, we should be offering them a deferral of their loan payment or a reduction in their interest rate. So they looked at providing a more balanced next best action strategy that could identify customers in need versus customers that may actually have opportunities. I mean, make no doubt about it, and they will tell you, they drove cross-selling during that period because there were certain customers that were in the market for additional financial services and that were building up savings because they weren't going out and spending money and had opportunity to make investments and do things with their money or refinance their mortgages or things of that nature. But by modifying their communication campaigns and offering to focus on helping customers, if you look at it in Australia, Commonwealth Bank got one of the top ratings from customers, and NatWest in the UK got one of the top ratings from customers during the crisis. Commonwealth Bank was actually able to release $3.6 billion of cash to Australian households and impact over 730,000 customers in a positive way through the pandemic by proactively reducing interest rates, waiving fees, or deferring loan payments based on what their needs are, and built up tremendous customer loyalty. And by the way, they were able to do that within a week because they had adaptive real-time next best action strategies in place.
And one of the things we saw coming out of the crisis and during was being called into a lot of advisory work on reimagining the future operating models, but also as a response to the crisis, a lot of initiatives around all the things you were saying, but also integrating things like Apple Chat, Facebook Messenger, WhatsApp, whatever channels work for customers, how do you bring them together seamlessly, and a lot of deployment of design thinking, which we have started to reimagine the future of the enterprise. From your perspective and vantage point, Mark, what are some of the learnings you see banks took away from this crisis? In other words, what are they going to do differently as they figure out their journey into the future?
So great question. And I think this is where we are really seeing the learnings come into play and where we see the opportunity. And, if we start off, and again, similar, we have kind of the internal focus, the internal capabilities that you see on the left here, and, how they're engaging with customers on the right. So if you look at starting off internally, whereas a lot of banks during the crisis had to add people, they built a lot of, dumb robots like RPA, independent RPA programs. What we found is that they weren't impacting the actual manual work, as much of the manual work as they hoped. And what people are focused now is how do they really go in and improve the efficiency of their people by increasing automation in an intelligent way to reduce the reliance on manual activities and decisions. We saw during the crisis that 80% of the time in operations was spent on manual tasks working across different applications. So the number one focus that we have seen internally is how can we reduce that manual workload? So, automation was a buzzword a while ago and it's picked up now again. What we've seen is the RPA approaches ended up being Band-Aids. And now they're realizing they can't just use, robotic process automation. They need to look at how they intelligently automate a process from end to end, manage everything from capturing the information to how they review that, to how they update all their different systems, to even how they make their decisions. And that leads into the one you see below that, which is the need to enable more flexible operations. One of the things that banks are starting to do differently is starting to build more shared operation services, centers of excellence and shared services where they want to be able to more dynamically reallocate work across distributed teams to improve the overall efficiency. So as the volumes of work shift from small business lending to servicing to customer service requests, in the past, they've had those independent operational teams, and they want to start establishing more common teams that can shift, where they can more easily shift that work. Now, what that requires, though, is for them to embed or codify their business policies and rules and reduce some of that human decision making or the reliance on human expertise. So in order to enable flexible operations, what they're having to do is build out these intelligent processes where everything isn't put on the operations person or on the customer service person, where they are guided by the system as to what decisions should be made, and even looking to enable some partial straight-through processing. So can you take some requests that are being made by customers and automate the resolution or the response, or at least partially automate that so that the human is just that final checkpoint? So that's a lot of the internal capabilities they're focused on. Then as you look at how they engage with customers, obviously the biggest one is accelerating that digital transformation we talked about before, filling those gaps, if you will, and delivering increased omni-channel capabilities across the customer lifecycle, from lending and accepting loans to the onboarding and KYC processes, all the way through the various different servicing activities, not just the simple information requests, but actually enabling people to digitally handle the more complex services. And we're seeing a shift to enable these things, from the manual and reducing the manual workload and enabling flexible operations to the digital transformation. What we're seeing people need to do is deliver these capabilities in a much more rapid fashion. And this has driven the shift towards low-code based approaches where someone can deliver things really rapidly. That was the only way Scotia was able to deliver something within 36 hours and digitally enable their customers. That was the only way the Bavarian state government was able to stand up a new digital loan processing application within 5 days. And as an example, Capgemini actually had another report that highlighted how developing with low-code platforms like Pega was actually enabled people to deliver applications 5.5 times faster than building it out with traditional Java code and other development techniques. But not only that, your UI build and enhancements could be delivered 12.5 times faster. You could define your process flows 20 times faster. And even more importantly, you could make those subsequent business changes almost 7 times faster, because it's not just that initial build of a capability. As we all know, these applications are living, breathing things, and we are having to change things rapidly. You look at what happened with the Paycheck Protection Program and the CARES Act, the policies and rules were constantly changing. They're even changing now as far as extending how much of it can be forgiven and what are the criteria for qualifying for forgiveness. So we have some banks that are now leveraging our platform to manage that forgiveness process in a low-code, more automated fashion where they can build those policies and rules directly into their system. And then the final thing is that story is really around the story I talked about in learning from what Commonwealth Bank did, what RBS NatWest did around engaging with customers. And we're seeing this shift now to more dynamically personalized customer engagement. That's one of the areas where banks are starting to refocus their next best actions to be more empathetic to the customer needs and have a more balanced approach and make sure they're focusing not on the product, but on the person, on their customer, and truly personalizing how they engage with that customer and making sure, back to what you just brought up before, that is done seamlessly across channels. And that was one of the other big things that was missing that they're figuring out, is they need to have the ability to engage with customers and learn across channels. If someone goes onto the website and is delivered an offer, and then they open up their mobile and they decline it or don't follow it up, when they then pull up their mobile app, you shouldn't then send them the exact same offer. When you then call into the call center, you should be offering them something else. If they did follow up on something on the website and jump to the mortgage calculator, then you should know that. And then the next time they call in or use their mobile app, start promoting a mortgage loan. So learning across those channels in real time and being able to personalize that and adapt what you deliver to them in real time is another capability that we see banks starting to look at building out as they move forward.
Yeah, well, one of the things we see is the banks are trying to attack the segmentation from first principles, because especially asset managers and wealth managers have had the traditional way of classifying who's a customer based on high net worth, what have you, mass affluent, so on. So we are seeing increasingly that real-time data curation is something that people are talking about. And I don't know if that can coexist with next best action, because some folks have defined next best action as a predefined next best action where they think here is what the customer wants, whereas the others are looking at the pings that are coming in from customers in an omni-channel perspective and then letting the data do the talking. So what are some of the ways you're seeing banks change the way they engage with their customers as we get to what Elias spoke about, the Bank 4.x inventive banking experiential customer way of doing things?
Yeah, and this is where maybe I jumped the gun on the script and talked a little bit about this just before, but I think this is the kind of point here is being able to harvest that data and capture those experiential journeys through these more intelligent and personalized engagements. I think that is one of the biggest things. And what banks are needing to do is increase their efforts to periodically understand their customer needs. And I think this is one of the big differences here moving forward in how banks are looking to engage with their customers. A lot of the way that banks have traditionally done next best action is through customer segmentation. And the more advanced banks move towards micro segmentation, but it was still around segmentation. It was still centered around the product. So we did a lot of work to identify, based on your payments, based on your interactions, based on your history, trying to predict life events, trying to identify if someone is about to buy a house, if someone's is about to send their kids to college, if someone's about to have a baby or even get engaged. For example, one of the things that we learned from one of the banks we worked with is that getting engaged is actually one of the most important life events for a bank, because it's the first battle over an account, because the two different spouses come in with their own bank accounts, and now as they merge their finances, one bank's going to be the winner and one's going to be the loser. So you want to identify those things. So identifying and understanding where your customers are in their journey, in their life journey, and then being able to engage with them at that point. And the other aspect about that is, again, as it talks about here, really understanding what their needs are. And before, what we've tried to do is understand which are the customers that an offer may be relevant to. Everything was around the offer. We define our offers and then say, which are the customers we think this offer may be relevant to. And the idea here, and the idea behind experiential banking, is really to kind of pivot and shift the focus. Instead of focusing on the offer, focus on the customer. What are the needs of that customer? And what is the best thing you should talk to that customer about at that point in time? Because, as an example, Sankar, you may be in the market for buying a house, but why is that? Maybe you're struggling to pay some of your bills right now. Maybe you've fallen below your minimum balance, and you're actually trying to sell your house to downsize or reduce your mortgage payment or other things of that nature. There may be a bunch of different things going on. And if right now you're struggling to make your payments and you're getting charged overdraft fees or charged fees because you've fallen below your minimum balance, the first thing you want to hear from me is not me trying to offer you a mortgage. So what you may want to offer, what maybe we should be talking to you about, is how we can waive your minimum balance fees for the next 3 months, how we can, defer some of your existing mortgage payments. So it's understanding what is the best thing for that customer at that point in time. And one of the things we do is we look at, one, what is the propensity for someone to accept any given offer? What's going to be the value for the bank for that happening? And, what are the different strategic levers that we want to put in place based on how we want to engage with that customer, what's important to the bank, and what's important to our reputation in the market. And that's where some banks were able to adapt fairly quickly. And that's where, like the Commonwealth Bank story, how they were able to really quickly adapt their strategies to look at and focus on and prioritize the servicing needs over the selling needs first, and engage with that customer in a way that understands where exactly they are and which of these 4 or 5 things we could talk to Sankar about is most important. And the second part of that is the learning aspect. And this is another thing that a lot of banks don't have built into their actual offer delivery services. So a lot of banks will do some analysis on a periodic basis and look at how effective their offer rates, their response rates were, and then we'll go and tweak their models and learn from that. One of the things that we've been doing differently with some of our customers is doing real-time learning based on the responses. So what we'll do is, if we see 1,000 people in a similar situation, we might actually do real-time A/B testing, where we'll give we'll give half of them one offer and the other half another offer, and see which one ends up being more responded to. And as we learn from that, we then will shift over and maybe start driving more of offer A over offer B. But even as we go on and identify offer A has more relevance to these people, we might still occasionally test out some other offers to see if those start picking up, because that's one of the other problems people have is if they only start delivering one offer, then it's going to self-select from that. And we saw at NatWest, as they started extending this into other areas, they actually saw they were able to reduce the number of offers they put in front of a customer by 60%. Yet at the same time, their response rate went from 4% to 27%, because they ensured that whatever they put in front of their customer was very relevant to their specific needs, and that we gave them the one thing they wanted to hear about, not 3 or 4 different things that may be of interest.
Some very practical insights, Mark. Thanks for that. I know this is such a fascinating topic. We can go all day. I see our phone and chat lines opening up. So over to you, Elias.
Thank you so much. Thank you so much, Mark, for the great insight and for making the point to bring insight from around the world and the good and the bad story. Really appreciate that. Well, while you were discussing, Shankar and Mark, we got several questions. And let me shoot the first one. You mentioned just before about best things for the customer at this time. And that brings ring a bell in one of our audience is about how banks are working on protecting the vulnerable populations, all these people that during the COVID were able to maintain their day-to-day, but financially were unstable. How to identify the vulnerable populations and how to protect them.
Oh, who is this? For Mark, right?
Mark, yeah.
So this is a great example of the need to be able to capture and harvest some of the information about your customers and do that analysis. And if you look back at the Commonwealth Bank example, what they actually did was looked at aspects about the customer to determine which things they should prioritize, like the occupation. One of the things we saw during the crisis is you could identify people in travel and transportation and hospitality and the restaurant industry. You could identify certain occupations that were at greater risk. You could look at based on the income levels. They could also even see, again, if your direct deposit from your employee was coming into from your employer was coming into that bank, you can see if there was a decrease in the wages and the deposits that were going in. And what they did is they were able to identify who are those vulnerable customers. And this was the other thing that the banks that did this right were able to do is, some banks just went and offered everyone a deferral of their mortgage, for example, even people that didn't need it. And some people maybe ended up taking advantage of it. And the banks, as a result, may have, lost out or deferred incoming revenue or cash they really didn't need to. The smarter banks took an intelligent process and identified those vulnerable customers, identified who were those ones that were truly in need. And those were the ones that got the offers for the reduced interest rates or the deferred mortgage payments or the waiver in fees. The customers that were wealthier, were more affluent, whose income wasn't impacted as much, those are the ones where they might start promoting other offers like, hey, take advantage of the lower interest rates to refinance your mortgage or bring your mortgage to our bank. So that's really how the more effective banks were able to take advantage of this, is identifying who are the vulnerable customers that they needed to treat with care, that they knew if they pushed the wrong strings, they pushed them away. But if they treat them well now, they will remember the bank and how they help them as they get through the crisis.
Fantastic. And that's what you just said here is quite relevant as we are slowly but surely coming out of this crisis, and the main effect of the crisis beyond the health side of it, the economical side will start to show up. And let's see how banks who has prepared are able to embrace this banking 4.x and engaging with them. We are getting another question from Simon, and that would go to Shankar, and I think Shankar and then Mark could maybe potentially answer it. So many siloed banking operations team have highly specialized skills, responsibility, and relationships. How are they reacting to an idea of flexible operations where they have to learn new skills and take responsibility for a much broader range of tasks?
Absolutely. So that's a great question, Simon. Thanks for that. So one of the things we are seeing during the COVID is that it was very tough to determine who's going to be healthy and who's not. So there was a galvanizing of people inside of banks, operations, and tech for various skills. So a lot of the training programs that the banks typically have for entries into each category have now been made into cross domain. So a lot of the banks have changed their model, even when you enter them, to kind of rotate you around various divisions and then cross train you on multiple things. The second thing is looking at things in isolation. And what I mean by that is if you look at something like a reconciliation, it is something that happens in loans, in mortgages, and cards. So how do you, in your training module, take the reconciliation, which is a common attribute to each of these domain categories, and then cross train individuals accordingly? Reporting is the other one. A lot of it is now is based on AI as well, where a lot of the platforms are being tweaked and a lot of the employees are being trained to handle multiple areas of work. And also a lot of awards are being instituted by banks to reward the folks that are able to show this and demonstrate this talent to learn, especially during this crisis across ops and tech. Mark, I don't know if you had any other thoughts on that.
Yeah, the one thing I would add, and I think those are all the right points, and as Sankar mentioned, that we see them trying to create people that have a broader set of services and things they can actually address. And I love the example of, like reconciliation, and there's other types of things like, loan processing. Can they not just handle large corporates, but small business loans, other things of that nature? But the other big area that is enabling them to do what Sankar is doing is through codifying some of these policies and rules that drive what a decision needs to be made. So a lot of those policies and decisions are based on, are delivered through the training and then based on the expertise of the individual. So what they're trying to do is identify what of those policies can actually be codified so you can provide more guided processing. And if you can provide more guided processing, you don't have to have the same level of expertise. Now, people will still have a primary area of focus, but the idea is, can they, in Sankar's example, they might be focused primarily on trade reconciliation in one area, but then can they handle, they're enabled through some of that guided processing to handle reconciliation in another area. And the one other aspect that we're seeing is by breaking out processes into like a triage step versus the full processing step. And we see that already today in things like fraud and AML, where you're able to have, people that have less experience take that triage step where they can review things and they're guided through the process. They're given the guidance of what are the key things to look for, how do you make certain decisions, and even can we automate some of those decisions? That's the other piece. Can we automate a lot of the decisions for them, not just the work, but some of the actual decisioning? Identify certain criteria. Hey, if the loan is, under this amount and the credit score and risk ratings are within this threshold, can we automatically approve certain aspects? And that was one thing we saw as an example Swedbank did in Sweden and throughout the Nordics, is they had digitized their lending, their mortgage and other retail lending application processes, and they were able to enable straight through processing of over 70% of the applications, between 70 to 80% of the applications, by codifying some of these policies and reducing the work that had to be done by the individual, the decision, so that you could reduce the amount of work that was passed on to a human.
Well, and Mark, to jump on what you said, we got a question from Stephanie, who was reacting to your message about real-time learning based on behaviors. How is data changing the way we operate in a post-COVID business model?
So I think one of the big things we're starting to see is that there's a lot more interaction data that maybe we hadn't leveraged as much before. I think a lot of our next best actions models were based on our financial data. They were based on the transactions, and people have been, working on that in the past a lot. But again, the way they would work on that is they would build these models kind of in the background, where they would analyze the data over a period of time, and it would take weeks, sometimes months, to build and tweak these models. And then if you wanted to, as behaviors changed, you would take another weeks or months to change and adapt the model. So you couldn't respond as quickly. So I think the two things I would say to Stephanie that have changed dramatically are, one, expanding the amount of data that you use, leveraging this interaction data and seeing how people, if someone comes in online, clicks on the mortgage calculator, even things, for example, like the way they pay their bills. We did a study, actually CBA had done this study where they analyzed the way people paid their bills online. And the traditional way they would pay online is they would go in and look at all their bills, click the amount, hit pay, enter the amount of their next bill, click pay. So they'd go to their payer screen, enter the amount, click pay. All of a sudden they noticed that some customers would click the amount, hit pay, then go back and check their balance, and go back to the payer screen, click the amount, click pay, then go back and check their balance. That understanding that change in interaction demonstrated that all of a sudden there was some financial stress with that customer, that they were worried, are they going to be able to make that payment, and had to go check. So learning from those sort of things could help them understand that this customer is struggling to pay their bills, or at least worried about it, even if their finances don't tell you that. So learning from those interactions and then being able to adapt in real time. That was something we weren't using our data in real time. We were taking it, throwing it into a warehouse, a mart, and then doing this analysis. Now what we're doing is learning in real time. As we see that change in behavior, immediately the next time the person goes to the website, pulls up online banking, pulls up their mobile app, we learn from that and change the offer in real time. And that's how CBA was able to change and adapt their strategies in days, not in weeks and months, by analyzing that information in real time.
Powerful, and the power of data and the real-time assessment. Shankar, a question from you. Jake heard you talking about wealth management, and his question is, are assets and wealth managers responding to post-COVID differently to the rest of the banking?
Yeah, it's a great question. Yeah, they are, and examples are in Capgemini's own World Wealth Report, where we see a big generational shift in income from the boomer generation to the Gen X and Gen Y. And one of the things coming out of COVID we are seeing is that income accumulation was a very important goal. And obviously it's Capgemini. We have as Elias knows, we have a scale-up ecosystem of some 200 fintechs, best of breed in everything they do. So for wealth accumulation, we work with companies like Envisage, where we identify new ways in which we are able to take the concept of financial inclusion and extend it to wealth inclusion. Similarly, working with the likes of Bridgeweave, we are able to create a gaming situation which lets each of the customers play with a toy which talks to the recent research report. So if you like Tesla, if you kind of play on it for a long time, and it kind of sends a signal saying that you like Tesla and therefore you may like EVs. And because of the fact you like Tesla and EVs, you may want to compare how your portfolio is doing compared to a portfolio of EVs. And from a risk management perspective, what kind of ETFs all happen naturally and in real time. We also see a lot of income decumulation happening as the boomer generation moves the wealth around, and a lot of people are planning for their funeral, selling of a home, or sending people into retirement. So where do you take money from to do this? And what is the most tax efficient way to do this? So we work with AI providers called Income Discovery through a platform called Ada, where we do it. And there was an earlier question also on talent and AI. So in working with companies like Keeper AI, we define everybody in a bank is known as Shankar, Elias, or Mark, but no one knows what do they mean and what are the soft skills behind them. So using techniques like the ones from Keeper AI through behavior analysis, we are able to identify what type of person from a behavior perspective is ready for the right channel to serve customers. So a variety of things, Elias, coming out of this COVID.
Fantastic. Gentlemen, I have a last question, but each one of you will have 1 minute to answer it if you want to be on time. Are you able to take the challenge? 1 minute to answer.
I'll question. I'll give Mark, more
time.
Try.
Mark, let's try to do that. The question is, how is conversational AI taking over CRM in a post-COVID world? Conversational AI taking over CRM.
Absolutely.
Mark.
Yeah, Mark, why don't you go first?
Yeah, I think the quick thing I'll mention is it's enabling people to really understand the digital engagement aspects. People are now wanting to, because of the long wait times, they're wanting to use chat, they're wanting to send emails, they're wanting to text, they're wanting to use mechanisms like that where they're conversing with their bank through digital channels, and it's actually providing a great opportunity for us to automate the responses to those requests. So, what we can now do is take a digital, typed request, understand what they're asking for, and respond in real time instead of having a human have to respond. And again, this is an area where we had some great examples where some of the clients that we were working with were able to take those digital requests coming in via chat or email, and over 70% of those requests, they're able to automatically classify, determine what the request is, and either intelligently route them to the person that's best equipped to handle them, or even in many cases, automatically respond to the customer. And as more people, especially millennials, are used to wanting to chat, text, they don't want to call even, we can use the conversational AI capabilities to respond in real time and actually reduce our operational costs, reduce our servicing costs by not requiring so many humans or people to go and respond and answer and resolve those requests.
Thank you so much. And Shankar, now you only have 30 seconds because Mark took a minute and a half.
On the same topic, yeah. So no, I think Mark covered everything very well. So the one thing I would say is that there is a new concept emerging called the Amazonization of banking, and where we see platforms the customers want are not data platforms or SaaS platforms, but they are platforms that have a little bit of everything. So they're able to mix and match whatever is needed for conversational AI. And typically we see that good 30 to 35% of cost saved possible even in the first month. So a lot of action in that space.
Fantastic. So thank you so much, Mark, and thank you so much, Shankar, for being with us today. And to all our audience, thank you so much. We were sharing with you the insights on the retail banking report with Mark from Pega. And we just want to thank you all for your time. And really, it was about transforming digital customer experience. Through what we've heard from Shankar and Mark, clearly there is a way forward. Thank you so much for your time and have a wonderful day. Bye, everybody.
Thank you.
Thank you.